Alrighty, well, howdy traders and investors, and welcome to Trading Battle number 51, sponsored by 8cap. My name is Gary Fichardt, known to many as the FX Big Dog, and just search the name FX Big Dog and you'll find me on YouTube and all social media outlets. I sleep, eat, and drink trading in all markets, and one of the markets that we're going to be talking shop today is going to be the Forex market. Now, if you're watching this Trading Battle on YouTube and you have not subscribed to this channel yet, what are you waiting for? Please go ahead and subscribe to this channel, smash the like button, go ahead and make sure that you also click the notification bell because we do trade battles every single week. So make sure you go ahead and do that. Now, while you're down there, don't forget to smash that like button, share this video on your social media as well, so we can get this video out to as many traders as possible. Man, I am pumped today. It is going to be exciting. We've got two interesting Forex traders, and some of them have got, not some of them, all of them, both of them have got great stories about how they became Forex traders. In fact, we're talking about it just before the show started today. They both use technical analysis and fundamental analysis before making trading decisions. So grab a pen and paper, take some notes as you hear from these challenges on how they're going to conquer the market today, and of course, be king. It's got to be the winner, right? The winner's got to be king today. So we're going to see who's going to be the winner today. Now, make sure that you go ahead and take some notes because it's going to be really, really good. Now, without further ado, let's go ahead and introduce the challenges for today for battle number 51. In the one corner, we have Vernon. With 6 years of trading experience, Ray
How's it
has
going?
tailored. Hi, buddy. How you doing, buddy? Good. Ray has tailored his unique trading style based on a mixture of institutional and retail market insights and perspectives. After founding TechnicalGods, sounds good, TechnicalGods LLC, he shares his trading style with his students all around the world. Ray, it is great to have you here again because we've been here before in this trading
Yeah,
battle. How you doing, buddy?
I'm doing great, and I appreciate the warm welcome. I'm excited to be here and just, excited to, battle a friend.
Oh, you deserve every bit of it, my friend. And let me ask you a quick question here. What does the technical guard say about the Yang sell-off? Are we going to see a turning point? Is it time to go ahead and start investing back in the Yang?
That's actually a really interesting question. Like, I haven't honestly looked too much into the yen this week. I'll be totally honest, but when I break down some charts, I'll actually give you my opinion on it.
Good, good. Well, we definitely want to hear from you, and good luck today, Ray. Good luck today.
Thank you
All
so
right,
much.
you bet, buddy. So in the other corner, we have I haven't actually been involved in a trading battle or even hosted with Austin Silver. But let's go ahead and introduce Austin Silver. Austin is, of course, he started his career as a retail trader in his college dorm room. Are you kidding me? All right. This is how Austin started. Now, he's built up one of the largest social media followers in the trading industry under the ASFF, which is Austin Silver FX, sharing valuable content through daily trades. Now, his goal is to get as many traders as possible to actively trade in this market and take full control of their financial future. Well, Austin, welcome to the trading battle, my friend.
It's good to be here with you, Gary. Ray, it's good to see you. I'm excited.
Likewise.
Good stuff. Now, quick question for you. Every successful trader has blown up the account at least once. How many times have you done that? And what is your biggest loss, your daily loss, and how did it happen?
So how many blown accounts? Honestly, Gary, I don't have an exact number because when I started trading, nobody was telling me what to do. So I was funding accounts with 1 to 1,000 leverage with $100 or $75, and I would blow them in one trade because I had no idea what I was doing. So I couldn't even give you an exact number on how many blown accounts. But my biggest one-day loss, I would say, especially like just looking in that first period of my trading, I remember one day I lost $2,800 and it was half of the account because now I realized at that point I needed to fund with more money. So I put $5,000 in and I wiped it clean, half of it clean in one trade. And I remember, I think that was a huge turning point for me. That was back in like 2016, 2017. And I said to myself, I was like, no one is growing in this business risking half of their money on one trade. It's never going to be worth it. And I think that was what kind of spiraled my study of risk management over the since then. I'm still studying it, still practicing it,
Yeah. And everyone goes through that. So just know that there's a lot of great traders that at least, I mean, look at business people around the world, right? How many great business people are there that have at least gone bankrupt 3 or 4 times in their lifetime?
Tons, more than people realize.
Exactly. And this is very
Yes.
similar, right? The trading is like a business, right? If we can bring,
Yeah.
oh, there we go, bring Ray on now. Trading is like a business, and we're going to treat it like a business, which means we have to make sure that we're managing our risk correctly so our business sustains through those hard times and we overcome those hard times. But at the same time, we've got to grow, right? We've got to grow. We've got to increase our lot sizes, increase our profitability. But the risk should always be constant, right? We cannot go and say, well, this month I'm going to go and be aggressive this month. Next month I'm going to be conservative, because if you're in drawdowns or in bad trades, you have to be consistent in order to be able, I'm going to say it again, in order to be able to have consistent results. So that's
100%.
great. It's a good learning curve. Good learning curve.
Yeah,
Now,
for sure.
question for both of you that we've got both here on the screen right now. What do you guys think about the Eurozone now that they've just announced this morning? We had this good big pump in the euro when they announced that they're going to start raising rates in July. Do you think this is just a sudden move that's going to continue, or do you think it's a pump and dump type of move that we're seeing right now?
You want to take a whack at it, Ray, or you want me to go first?
Anyone?
Sure, I'll take a whack at it. So, my favorite pair is actually Euro USD. So, I'm tracking it religiously. Yeah. But I honestly don't think it's just a pump and dump. I actually think we could see a little bit more of a movement, especially when we correlate it to other things such as, the DXY and then even the stock market. So like the US 30 indices, et cetera. We can see the correlation between things happening. So personally, I would like to see, a little bit more of a sell-off in Euro USD personally. Yeah.
Well, are you stuck in some trades in the Euro USD?
So I'm not stuck in any now, but I actually traded it earlier today. Take profit on 2 trades. So
okay,
nice.
All right. Now, interesting. Let's give Austin a chance to reply on that as well, and I'm going to give you guys something to think about too.
I think when you talk about major interest rates decisions, you have more experience, of course, with this than me, Gary. But in my years of looking at this, I don't see them as normally pump and dump things. I often see the pump and dump thing happen when they talk about changing rates, but they don't actually change the rates. You see some interesting volatility, but then things kind of continue. But when you actually hear them starting to say we're making progress in raising rates, I think that's more of the policy changing decisions that you see drive the Forex market very often. When you look back on things years into the past, you'll say, oh, why did the Euro AUD sold off from 2018 to 2019? Well, there was an interest rate decision at the start of the year. That's what did it, or whatever it may be. So I think that these are very important decisions. I have a couple of things I want to show you when we start sharing the screen, just about even if you look at bond yields here in the States, there's a lot of interesting, me being not too pessimistic, interesting to call them flags going on right now. And I think that, like you said, this Euro rate hike is one of them.
Yeah, go ahead and show the charts. Let's go ahead and take the time to show the chart, because I think it's interesting to share.
Absolutely. So I have your USD JPY pulled up, but I actually want to switch my screen really quick, and I want to show you a different browser. So let me just pull this up. This is a tweet that I saw today. So I think it's just a very interesting chart that's worth us looking at for a quick second. Can you guys see this okay? Beautiful.
Yes, we do.
So this is the 10-year treasury yield. And every single time that you can see a peak here, it's labeled with some major event. Now, I heard this on Real Vision today. I'm a big Real Vision fan. I think that their macroeconomic discussions are incredible. And the guy on Real Vision was saying the same thing that this guy tweeted, which you can see in the top right corner, says rates rise until something breaks. Is anything broken? So as rates continue to go higher, I think it is important to keep in mind that in the past, whether it's the stock market or whether it's the, if you look back into 1980, First Pennsylvania, these bank issues, or maybe a fund goes under, something has to give before we start to see rates return lower. And I think one of those things that could give would be something like what's going on with the yen leading to something else. So it's very important to see there's always something that causes the turn. So we're starting to see things set up, and it's just a matter of what thing are we going to pick to look back upon in the future and say, oh, it caused it. So that's something that I'm kind of keeping my eye on here. But to go back to dollar yen really quick, as we throw this around, it's pretty incredible since the start of March, which you've seen this thing do. So if we just measure the move from the beginning of March, 12% dollar yen, USD JPY, dollar yen, 12% in 2 months on a currency pair. Ray, like that's probably one of the first times either of us have ever seen that as long as we've been trading. I don't know about you, Gary.
Insane.
That's huge, right?
No,
like that's massive.
We've seen plenty. We've seen plenty of that. And you got to know about the JPYs. So firstly, number one, on the JPYs, we've had Bank of Japan intervention in JPYs in 91 and in 96 as well. In fact, 98, 91, 98. Now, the thing here is we're at that level. We're at a level where we could very much see a Bank of Japan intervention. And I'm going to say this. This rally that we see now in the JPYs, which means that this we've seen a sell-off in JPY itself, is actually getting to an end right now. The signal that you want to look for is you're actually going to take a look at the Swiss JPY cross. If you look at the Swiss JPY, you're going to start seeing a switch of money flow from one safe haven to another. When you see the Swiss JPY change trend, that's when you got to start thinking about selling off the JPY crosses, because that's when we're going to start seeing change. And that could very much happen very soon. Yeah, very much soon. So, you know what? I don't normally trade JPYs, and I don't call myself a big fundamentalist, because I know about news. I know how to fix the markets. I know, interest rates are all based on what the inflation is doing, how they can control inflation and keep it to that 2% mark. We know that the US is at 8.5%. The Feds are doing nothing to be able to control that. We know that the central bank with the not the central bank, but the ECB are a little bit late at the party, but they've been keeping rates off at the 0% rate. They're now talking about in July raising the rate. The reason why we had this pump is because the market's actually demanding it. The market wants that. But now, if we're going to see a dump, if we're not going to see it continue, it means that it's already been sort of like discounted that they're going to, raise the rates. So price already discounted that into the market.
This is the big conversation, right? Is it priced in or not? That is the big question, is what is priced in or not?
Absolutely.
Right? Yeah.
And you've got to come back to the technicals, right? You guys are both technical traders, right? If you look at the larger time frame, and I was going to ask you a question about Elliott Wave. If you guys studied Elliott Wave or understand that a little bit, you'll actually look at the Euro daily time frame, the Euro US dollar daily, and we've actually had a fifth wave completion. So which means that the market's really looking for a correction move in the Euro US dollar. So we're looking for bullish movement in Euro US dollar. So we can dig more into that when I think maybe Ray's going to pop out a trade there and says he's going to trade the Euro US dollar. And we can definitely dig into a little bit more of that, but it's interesting.
Yeah. I mean, when you look at this, Ray, when you look at Euro USD, are you more bullish or more bearish? Because to me, Gary, I couldn't be buying Euro USD right now. It's been on such a strong downtrend. And I feel like it's almost ironic, because here, and I know we're all in, I don't know exactly where you are, Ray. I'm sure you're in the States, right?
California. Yeah.
Yeah. So in the States, everybody all year and all last year was like, Joe Biden's getting elected. The dollar is going to zero. Everything's going to hell. Right. But in reality, it's been the opposite of that. Euro USD is going down and dollar index is going up. So it's almost funny to me to see that be the progression. You know what I'm saying, Ray?
Yeah.
No, I definitely agree on that. It's actually funny to watch, because I feel like we live in that social media era where everybody's saying like, oh, something huge is about to happen. Prepare yourself, and nothing's happened. It just continued to trickle up with the DXY.
You just read the chart. You made money short. If you just read the chart's going to tell you. And that's why, Gary, I think me and Ray are good competitors for this, because we're like both technical guys. We think about fundamentals, but I think me and Ray both will sit here and be like, yeah, bro, that's a good idea, but you and I don't know enough information to know if that's for sure why that is happening. The fundamentals are so tough to be directly factual about, where technicals, price doesn't lie, bro. Once that candle is closed, how is it going to fake me out? It's closed. Yeah. Price is done.
Absolutely. And that's where it comes down. And that was going to be one of my questions for both of you, is like, what do you use most to make that final decision? Is it going to be technicals or fundamentals? Because we've had traders on the show that say, hey, you know what, I use both. And in my point of view, it's like, you can't have two chiefs, right? You got to have one chief that makes the final decision. And we call the fundamentals and technicals as two chiefs. Which one is going to overrule the other one? And at the end of the day, I think you guys are on the right track where you say, hey, listen, I'm a technical trader. I understand fundamentals. I got the gist of it. But at the end of the day, it's got to be my technicals, because that's where I make my trading decisions on. It's got to be that, because that doesn't lie. You're right.
Yeah. I'm a firm believer that, fundamentals are what push the technicals that are already showing and are already going to happen. So for example, when I come to the market, usually at New York Open, what I'm looking for is, where's the supply and demand on my chart? And then where is the actual price at in that moment, before the news is about to come out? Like, study the market and, figure out within that 15 to 30-minute window before the news actually comes out, like, okay, do I feel like, price is overbought at this point, oversold at this point? And, looking for certain patterns that can give you that edge to get in the market before the actual move happens.
Yeah, absolutely. Now, question for both of you. Do you guys use any sort of indicators to make your decisions, or is it just price action?
Yeah, so I use indicators, and you probably saw them on my screen. I use exponential moving averages and something called a TDI. It's a trader's dynamic index. It's just an RSI with moving averages. And I just use the indicators to identify trend. I'm not entering at a specific crossover because that's too vague, but I'm using them to gauge trend and then set stop levels and read risk reward, stuff like that. But to the question about the technicals and the fundamentals, I think the key, like you said, is having that one chief. And the thing about Forex that got me excited years ago and still is one of the reasons I love it and why I love Bitcoin recently is because you can have a fundamental idea, but you know that it is a price action market. It's a market driven by price action. So like, for example, on Monday, I remember we had a bank holiday in most European banks coming off of Easter this week. On Monday or Sunday, I tweeted a picture of Bitcoin on the daily time frame. And I said, it doesn't look like it's going to be a good week for Bitcoin. If you look at my trading this week, I've had one trade. I bought Bitcoin on Tuesday and I held it till today. So I will think whatever I want to think about a fundamental and even put a picture about it. But at the end of the day, if the technicals are saying buy it, I'm not going to sit on the sideline just because I had a funny hunch on a Sunday that it's going to go down this week. You know what I'm saying? I'm still going to read a chart and trust that's the chief.
Yep. Good. We'll stick to that. I think you know what makes a great trader is a trader that can decide on something, which is his trading plan, and stick to his trading plan. So, don't trade your heart, trade the chart, and then you'll survive.
I like that. That's a good tattoo, Gary. I feel like I need that like right here on my neck or something. Like, don't trade the chart, don't trade the heart, trade the chart.
There we go, my friend. There we go. We'll throw a couple more of those out before end of today.
All right, good. Some one-liners.
All right, so let's see. All right, we got some great conversation, but we definitely got to get into the challenges for today, because we can sit down and chat about this all year long. But at the end of the day, it comes down to action, right? And so here's our challenges for today. We got 3 challenges. Are you guys ready for it?
Yep.
Let's go.
All right, let's rock and roll. All right, so let's go ahead and look at challenge number 1. Challenge number 1 is trade a major index. It doesn't matter what it is. That's your first challenge. Number 2 is going to be risk on, risk off. Now, trade either asset types or give your rationale. Challenge number 3 is going to be place a trade for the next 5 days. And like I said before, you can go ahead and place a trade, multiple entry points. You can go ahead and, you guys go crazy when it comes to that 5-day trading. And the reason why I like this 5-day trade challenge is because sometimes you look at the market and specifically, maybe more of a trend trader, you look at the market, you go, well, the market can probably dip before it rallies. So you can enter now in case it rallies, or you can go ahead and enter and place another bunch of orders down below where you think the market's going to retrace to. So you can pick those up before the 5 days is over. So you've got a bit of leverage there to play around with that option. So I like that challenge.
Yeah.
All right. So
awesome. This should be fun.
It's going to be great. It's going to be great. Now, viewers, don't forget to subscribe, share, and smash that like button like there's no tomorrow. Let's go ahead and get this battle on the road. And we're going to start off with Austin. Austin, you've got the floor, my friends. You've got the honors. Take it away.
Gary, I'm already ahead of you. I actually, while we started this stream, already placed some shorts. I'm going to do US 500, which is the S&P 500. So I'm already short going into tomorrow. So the breakdown is pretty simple with this, and I'd like to hold this as my 5-day trade as well. Going into the weekend, as long as tomorrow isn't like a crazy strong rally, you Gary, sometimes you get a hunch, you get a feeling. I'm looking at this, and if tomorrow was another 2% down day, 1% down day for U.S. equities, I would not be surprised. If it was a sideways day, I wouldn't really be surprised. If it reversed really strong and was bullish is really what would surprise me. So where that bias kind of comes from is going back to what I mentioned at the beginning. We need something to break in order to see rates return lower, the 10-year especially. So what I'm looking at here, I have my Traders Dynamic Index on the bottom of the screen. I drew a white line to just show that the RSI has been falling since November of 2021. So this is going back last year. With that RSI falling, but price action continuing to rise, we call that bullish divergence, or excuse me, bearish divergence in the direction of the RSI. So with that bearish divergence set in, now, of course, I'm looking for lower highs. I have one here. I have one now, pretty strong level that I like here at 45.90. So as we're now under 45.90, and we have our 8 and 21 EMAs, which is that red and yellow. So I'll turn these other ones off just to make it clean. Now that our 8 and 21 EMA is crossed down, coming off of that level, really the third hit to this zone, I definitely am bearish. And I could even see us creating a zone here of being more of like a shorter term resistance above, being the strong resistance up here, probably, like I said, 45.90. So I'm short today. I'm going to be short bias tomorrow as long as everything continues to be bearish. And that's going to carry over into next week for me. Because like I said, I think there's a lot of, is the word frothiness, maybe overexcitement over the last, I would say, end of 2019 into 2020, into 2021, people were so bullish. Everybody was making money just buying everything. Look at the bull run that we had since COVID. So I think some type of a sideways bear market is only natural if we're really looking at what markets have done in the past. How low does this go? I don't know. That's not for me to forecast. But right now, going into tomorrow, I definitely could see a strong bearish bar. RSI is under 50. Market sentiment is under 50. And then just to take it to the shorter time frame really quick, with a big day like today, it's very, very, in my experience, very, very rare we see a full reversal, especially on an index like this. Bitcoin will do whatever Bitcoin wants to do. Bitcoin was up 3% at one point today, and now it's finished down 2.5%. Bitcoin's a different beast to me. So when we're talking about an index, I don't see a strong rally tomorrow. I see either sideways or more of a sell-off, and then I think that sentiment carries from this week into next week. So that's my first trade for now.
I like it, and I'm not going to go into it, but I see a good setup based on LHB structure right there. I think you're in the right direction based on also, you can see that long-term trend line has been broken too. So there is some downside action that is needed for that, at least a correction move on that big bullish rally we had during the 2020 period. So I think you're good. I think you got a good trade there. I think I like it. I like it a lot. Thanks for your breakdown. I appreciate that. So just a quick question. Well, not a quick question, just a reminder to you. You don't have to hold that trade up for the next 5 days. You have a choice to close out. If you feel like, hey, man, we're done by the end of Friday, you can close it out. As long as
listen, if we go down 3% tomorrow, I might take some profit on it. I might add to it overnight tonight and then take profit tomorrow morning. My one thing I want to just remember, if you want to throw my screen up really quick, my stop is in on this trade at the high of today's price action. So that price is like 45.16. I'm using that pin as my stop loss just to give this space. And really, like back to what I said before, I don't want to forecast that this is going to shoot down to hit new lows, but I do want to react to say the 8 EMA is under the 21, sentiment is bearish, structure is bearish. Fundamentally, it's easier to be bearish than bullish. So I'm going to give this space, whether it wants to come down, up a little bit, sideways. I'm going to just read and react to that 8 and 21 EMA and trust that price action structure. And that's what this stop does. That stop gives me that space.
Okay, good. Yeah. Now, you cannot add new positions after today, but you can certainly add pending positions if you want to do that. And if it picks it up, then great. So you can do pending sell the orders if you need to.
Perfect.
All right, perfect. Let's go ahead and move on to Ray. Ray, trade a major index. What's that going to be for you?
Cool. So it's actually going to be US 30. And I have a pretty similar bias to Austin. I had this marked up from earlier. I didn't place a trade just yet. I wanted to do it live for you guys, but just looking at the price action, since I would even say September, we had this rally up. one more rally. And then from there, we actually started seeing major lows being taken out over and over. So if I was to just, grab a trend line here, we could see, easily lower highs and lower lows being put in the market. Personally, I trade, bearish engulfings or order blocks, and I'm looking for the retest to the ones that create the actual impulse leg of structure. So we can see here that people who are trying to get into the market in this area here, catching that sell-off, they may have, if they're swing traders, they may have caught, a good amount of pips, but price ended up coming back, running their stops, and then coming back to this true level of what I would say is where the orders are sitting. So we get that reaction, we form another bearish candlestick here. And what I'm looking for now is some kind of little retest into this base candle, or even a pull into this 8-hour base candle here. So what I'm going to do is actually place a sell at market right now, and then also set a pending up here. And then what I'll be targeting is the actual level of demand at this low right here. So I'll draw out how my trades will look. I'm going to put this stop right above here. Then I'm going to target down into this area. So let's go 1 to 2.5 on this. And then I'm also going to do another trade based off of this candlestick up here, targeting that same level. All right, so let's see.
So you're going to enter like a pending order a little higher up? Is that what you're doing?
Yeah, so I'm going to set a pending order here, but I'm also going to take a sell at market right now.
Gotcha.
Cool.
I like that. I like that play. Backing yourself up in case the market does go back up, because we all know that bearish candlestick formations, in this case, which is a bearish candlestick formation, does get tested 80% of the time. They get retested and could go back up about 62% of that actual bearish candle. So getting into another entry point like that would certainly be very useful.
Yeah. Nice.
Cool.
All right. Good. All right. We got that trade in. You locked and loaded?
Setting the stop real quick.
Perfect.
Yeah, I added to mine as well. So I got some good risk on this. We'll let this thing do its thing. So we'll see how the weekend plays out. I mean, Ray and I are both kind of feeling the same thing, which is normally a good sign if two guys are looking at, with some experience. Hopefully we have as much as it pains me to say it, but I'm not holding any stock, so it's okay. I hope we have a bearish day tomorrow,
Definitely.
Yes. Now you'll also find out that if you studied a lot of the other pairs as well, you see that there's a lot of turning points happening in a lot of currency pairs, a lot of markets. So this could be the same thing, because I've noticed that the charts that you showed us were daily charts, and so they are setting up with turning points, bearish candlestick formations on both those charts. We're definitely looking at changes in like the yen pair, possibly in the yen crosses as well, even the Swiss pairs as well, like the euro Swiss as well. Everything's bouncing off tops and bottoms right now and creating turning points. So I think you guys are picking up some good timing here on those trades.
Great. Awesome.
All right. Perfect, guys. Well, that concludes challenge number 1. Let's go ahead and jump into challenge number 2. And this is going to be risk off, risk on, or at least risk on, risk off. Trade either asset types, or go ahead and just give you your rationale on that.
So when you say risk on, what does that mean exactly, Gary? Risk on, risk off. So like trade anything, trade Bitcoin, trade anything?
Correct, yes. Based on a risk on, risk off appetite, which means that you're expecting, like, for instance, if you believe that there's inflationary issues, a nice risk off would be, of course, hedging against inflation while trading on Bitcoin. So something like that you're taking out of risk appetite and you're moving into a risk off appetite, depend, of course, what appetite you think the market's in right now. If you think it's on a risk on or a risk off, you'll be investing in whatever asset that you're looking to hedge against. So yours could be, Austin. You could be. I mean, you spoke about Bitcoin rallying right now. That could be a risk off, moving out of the sort of the currencies and moving more into sort of buying on Bitcoin itself.
Yeah, absolutely. I'm looking at it right now on the daily time frame. It's a tough buy for me right now. Like I said, I was long the last 2.5 days, but just with today's close coming in 30 minutes as a really, in my opinion, a pretty strong indicator that we're going to see more bearish movement overall. Again, just back to like simplicity with a chart. I see that the 8 EMA is under the 21 EMA. I know more recently you could say we've got some higher lows in here, but on the bigger picture, as Bitcoin has been pulling back off its all-time high of near 70,000, this is definitely making lower highs, in my opinion. And you could argue that it's making lower lows as well. It's just that this has been a longer pullback in this range. So I think I don't want to say I'm ready to, jump in the short trade for Bitcoin, but I think that if I was going to have to do something, that's what I would be looking to do. Do we have to place a trade with this challenge right now, Gary, or can I place this one later?
No, it's got to be a place to trade right now. Now, you can put a opinion order if you choose. So if you feel like you want to wait for it to break a level, you can go ahead and put a opinion order there. And make sure you guys are placing this on the 8-cap platform, so we can have that in the challenge as well. In the scoreboard.
Yeah.
Cool.
All right.
I'll pass it to Ray for now. I'm gonna think about it for a few minutes.
Okay. You want to call a friend, right?
Phone a friend. Yeah. Passing the rock. Go ahead, Ray. What do you got?
Go for it, Ray. Cool. Tell us, what is yours?
Cool. So I'm actually looking at the DXY right now, and I mean, after this drop we had into this bullish order block right here, and the reaction we had off of it, we had a very strong closure with this bullish candle here, and I don't really see us coming down, at least not right now in the next few days. I would at least want to see us retest into this area of supply, but I honestly do think we can go even further through it. So I'm going to pick Euro USD, and I believe it's risk off because of the fact that dollar is strong. So I'm going to look for shorts on EUR USD. I have two zones of demand drawn here. The safer one, of course, would be this area here, but I mean, we're doing it for charity, so I'm just going to go big on this one and see what happens. One more thing I wanted to point out actually is from a higher time frame, we did have a pretty decent trend line here. We had a point A, point B, and point C, but we did get that taken out. So there's a lot of confusion happening at this level. Retail traders are thinking, is it still going to work as far as taking buys here and seeing a big impulse, or are we going to push through this level? I always just try to stay true to, my first mind when I look at the market. So if I look at this area, I call it the bearish bullish bearish pattern, but it's a form of supply, and we can see a long wick rejection to the top side here that would have taken out a lot of people's stop losses if they caught, this sell or were looking for a further sell-off, before this retracement happened. So as I drop down through the time frames, I believe the 12-hour actually drew this zone off of. We had this level retested multiple times with huge rejections. So I'm just gonna, go for the sell here. Let's draw it out.
And that is on the, do you have a 12-hour chart? Is that the 12-hour chart you got up there?
Yeah, correct.
Well, I've never seen the 12-hour chart before, and I've been doing this for 25 years. No one's opened up a 12-hour chart. That's funny.
Well, I'm glad I could bring some fresh, insight to the show.
It's fresh, Ray. It's fresh.
Awesome. But yeah, honestly, usually in my trading, this would not be the ideal entry, but I know we have to take market execution right now. If we look at the daily, for an example, this wick was so long that usually you will, even if it's going to go bearish, sometimes you'll still see price pull back into it. So once again, I think for this one, am I able to place 2 trades on this?
Oh yeah, you can. You can go crazy, man. This is the wild, wild west here.
Okay, cool. So what I'm going to do is place a trade there, and then let's see. Let's go down to a lower time frame. Yeah, because normally I would want to see price potentially even pull back to a level like this that has some supply, take out some stop losses, and then we see a correction. So I'm going to, take a trade here, stop loss here, and then I'm going to take another trade or a pending order. I'll set it to this level right here, and we'll target that same low.
All right. So while you're doing that, Ray, I'm not only a hosting, but I'm that guy that you don't want when you're trading, because he's always going to make you second guess what you're doing. All right. So I'm going to be playing devil's advocate right here and throwing a couple of things out there. And I want to hear what your response is, and really just to pull some more information out of you, because I know there's a lot of questions that a lot of students have, and they want to go ahead and post it out there. But I'm going to be that guy telling you asking you a couple of questions. So looking at your chart, if we can go back to Ray's chart right here.
Sure.
Go ahead and show me. This is the 1 hour, but let's go ahead and throw up the daily chart right now.
Okay.
And you've got your trend line drawn across there. Do you not see that this could be just in fact, if you had maybe Austin's oscillator down below, you might have actually seen a little bit of positive divergence on this as well, which is indicating that price is broken back above that previous low that we had. We had a little bit of a peak below that, but that's typical when you have some sort of divergence setting up where price moves in one direction and momentum's moving in the opposite. And so you've got a nice little, looks like a positive divergence setting up there. I'm not going to go into Elliott wave, but I spoke about it before. There's an Elliott wave 5-way structure that is complete, and now it's looking for this correction upside move. Are you not concerned? And again, not concerned, but what would be your the way you would manage the trade if it doesn't work out in your favor, if it does start going back up north? Now, I know that in this challenge, once you get stopped out, you're out. But if you were trading this, continuously, what would you do if you had placed this trade and you got stopped out? Would you automatically reverse your position, or would there be something that you'd be looking for in order to say, I'm now going to convert now into being a buyer instead of holding it as a seller, sorry.
Gotcha. Yeah, so there would actually be several things I'll be looking for. So, once again, I trade New York Open, which is a very small window of time. Like I'm trading only usually like 2 to 3 hours. And, I'm looking for certain signs of the market, such as session levels, such as, the previous New York session high, London session high and low, things like that to, really know my range for that day that I'm going to be trading within. So a trade like this, honestly, is more of, just for fun. Honestly, like if I had to think about reversing my position, like let's say I get stopped out on this, what I'm going to be looking at is number one, are we starting to see more exhaustion to the bottom side of price? Because right now, we're seeing long wicks on the top side, but we're not seeing too much on the bottom side here. We're seeing just as much, bearish momentum coming in as, this bullish rise here. So to me, it's a fight right now. At this trend line, it could go either way. And I feel like it just comes down to risk management as well. As long as you have your risk management in place, risking 0.5 to 1% on, one particular trade, you don't feel so emotional to a bias, which means that either way it goes, I know that I'm okay to trade again. So at that moment, that's when I would look for signs such as, are we getting creations of demand that are holding in the direction I want to see price building? Are we seeing wicks to the bottom side? Just different signs like that.
Yeah. Great answer. Great. Thank you. I appreciate you letting us get into your head a little bit there and figuring out what your thought process is. All right. Definitely. Fantastic. Well, we're going to go ahead and jump into challenge number 3. We're going to go ahead and bring it back to Austin. Austin, this is your 5-day trade, and I know you said that you're going to go ahead and stick with that trade that you placed on the, I think it was the DY. Hang on, was it the
S&P 500? Yep.
S&P 500. There we go. Yeah. All right, so you're going to stick with that trade. Are you going to go ahead and add extra to that, or how are you going to handle that trade?
So I was trying to, I'm looking at my other charts here, and let me just make sure my screen. Yeah. So right now I'm looking at oil. This is U.S. oil on the daily time frame. This has been something that I'm really interested in because you can see when oil moves, it moves in trend. Oil is a commodity, and a lot of commodities tend to trend on higher time frames. Of course, nothing moves in a straight line, but trend is strong. Now, what do you notice is different with oil February 28th on? That's when Russia invaded Ukraine. So oil has had these really huge bars. And you can see, Gary, we didn't really talk about this, but I don't use red and green candles. All of my candles are black just to remove some emotion. So you can just see how big these big black bars recently, since the end of February, have been compared to previous trading going back into January and February. So if oil can stay this volatile and it doesn't just get quiet again, I'm going to keep trading it. Because if you look at my statistics of my own trading in the last 30 days, about 40% of my trades have been on oil. Let's say 30% have been on oil. I would say another 45 to 50%. 80% of my trades have been between Bitcoin and oil. So it's mostly Bitcoin, but oil is a big chunk of that as well because I like the volatility. I like where I can see trend and volatile moves. So now with a really strong shelf here at like 93.50, around the 95 price level, and with this very, very bullish day that closed here today, off the 21 EMA with slowing at the 21 EMA yesterday, I would say we could even consider this a stop level here at 99.84, and we could look to buy this off 103 and maybe take this back up towards 110, 112, and even 116 in the short term. So oil is something that I'm looking at placing a trade in here while we're still on the call. And then another thing that I was looking at that I might want to take here is Dogecoin. I don't know if you're a crypto guy, but is Bitcoin? Okay, good. So as Bitcoin looks bearish on the daily, here on Dogecoin, as this thing really starts to die from what it was, I'd love to short this to zero. It would make me really happy, Gary, to see Dogecoin just crumble and have me holding the short position. I would just love that, because I've been telling everybody that these coins that don't do anything are worthless. It's really worth zero. It's just a matter of when do we get there. So I would love to be able to get into this as well. So I'm looking at oil and I'm looking at Dogecoin. Those two are what I'm focused on. And the Dogecoin play comes kind of off of what I'm seeing on Bitcoin more almost. This hold of the 21 here on Bitcoin. If Bitcoin is bearish tomorrow, Dogecoin is bearish tomorrow. How many days do you see where Doge goes in one way or all the crypto market goes in one way and Bitcoin goes the other way? That doesn't really happen still. So Bitcoin is the driver because it's got the biggest market cap, but I can, play around with my other, poop coins and see what happens too.
Okay, well, that's an interesting call. And so while you're looking at oil, when you're looking at the oil chart, let's open this conversation to both of you. Where do you guys see oil going in the next, let's say, 3 months? Because, I mean, we've got struggles, of course, with the Ukraine, the Russia-Ukraine war. We have struggles, of course, Biden trying to make decisions of how he wants to handle the oil crisis. And him looking outside the U.S. as an option instead of looking inside the U.S. as an option. What do you guys think that the price of oil is going to be in the next 3 months from now, based on some technical setups? Because obviously fundamentals we can't decide on that.
$150 a barrel in a year from now would not surprise me.
Yeah. I actually have a target at 148.
Yeah, it would not be good. People will not like that. I saw Dan Bilzerian. I don't know if you guys know who that is. He tweeted something about it cost him $1 million to fill up his plane. Rich people don't like expensive gas and poor people don't like expensive gas. So it is a really good indicator to me of like what would parallel a recession. So if oil goes to 150 and stocks continue to look bare, in my opinion, we're knocking on the doors of a recession right now. So what happens during recessions? Commodities go up, stocks go down. So gold, silver, oil, palladium, platinum, corn, soybeans, everything is going to continue, in my opinion, to go higher. The problem that we're facing, and this would be its own podcast in itself, this is like the topic of the year. It's like we have an unresponsible Fed at the head of the ship. They are captaining this ship. And it's just a matter of, does our Fed right now with Jerome Powell at the head want to be the one that stops kicking the can down the road? Because if you look at and I'm not a big Peter Schiff guy, but Peter Schiff has said many times, and I do agree with this, he's like, you can keep doing what we're doing, creating monetary theory as we roll, creating money as we need, and printing and all this. And it's bad, but it keeps all of us functioning. Like I got food in my fridge. We're all okay. What could be worse is to stop kicking the can down the road and see what happens then. So who wants that responsibility? So I think it's just very, it's probably more of that than someone coming in and being like, hey, man, we spent responsibly. We printed too much. We got to rebalance everything. We're firing a bunch of people. We're restructuring. That's probably not going to happen. So I think you're going to see things. Would it be called hyperinflation when you start to see like parabolic moves in some of these commodities, right? Maybe. I think that's on the table at least right now. What do you think, Ray?
Yep.
No, I definitely agree on that. And I was actually just reading another post that kind of correlates to, the times we're in. Just like you said, like some people are still fortunate enough to be able to pay for their gas and pay for their living expenses. But I just read something that said over 64% of people have less than $1,000 in America, in their savings account. So I definitely think, like you said, we're on the verge of a recession because, when things get hyperinflated, as we see the prices of oil, food, I mean, I think even like, I think cars were up like 30% for used cars.
Higher than that.
Which insane though, right? So it's
crazy.
like, we can definitely see that a lot of people are going to get priced out, but also a lot of people are going to, start, I guess, defaulting on their mortgages and different things like that, which is also going to cause the economy to crash. So I'm looking at all kinds of things right now. It's crazy.
Yeah. Yeah, I'm smiling right now because we're talking about gas, and it brought up a conversation I had with my daughter. She's 25 years old. She just qualified. She's just completed her studies now. She's a registered nurse, and she's working for a good hospital as a registered nurse. And awesome. I just told her, because she's now, I was supporting her while she was studying, and I just told her just the other day, I said, baby girl, I'm going to have to take your credit card away from you now, and you're going to have to start paying for your own gas. And she goes, what? I have to pay for my own gas? I'm going to have to sell my clothes. I said, what? She says, I'm going to be bankrupt. I said, that's all your expenses you have is your gas. It's crazy. It's the rising gas prices, and she's seen that at the pump when she fills up now. It used to be like $30. Now she's paying $50. She's like, I'm going to have to sell my clothes. So it's just
I would say that the 150 per barrel is on the table, especially again, not to be political, but there is power with the US government where Biden could do things to control the rising gas prices, and he's not. He did release a large reserve of oil. I think that was last week or the week before. So some steps, but I think there's other things that could be done to try to control this. So I think there's deep political motives when it comes to the price of oil. What have we gone to war with? Every other country, like what has America tried to conquer for? Oil. If we're not fighting over religion, we're fighting over oil and money for natural resources. So oil is a very politically driven commodity. Whereas if you look at palladium, I would say you could trade palladium and not really worry about politics as much because it's not a political commodity. Does that make sense? Yeah. So I think you have this underlying current going on here where the Saudi Arabian government is involved, the crown prince, whatever, he's in, like all these different players go into how oil is priced. And that just kind of feeds like the overall idea, like oil at 150, the fact that gold is under 2,000 blows my mind. I actually think I'm living in a dream. Every day I wake up and gold isn't $3,000. I'm like, why? What is going on? You know, I think that there's a lot of other motives that go into, or a lot of other factors that go into pricing some of these commodities, especially gold, especially oil, because they're politically driven.
Yeah, I just briefly saw a tweet go through talking about the COP meeting, the summit meeting they had had this week. They spoke about actually, in fact, destroying and replacing the current financial markets. And they spoke about, they even mentioned the word blockchain. So how do you see, look, it's exciting the way things are going, but I can't see this changing over the next 2 years. It's going to change quick, but it's not going to be within the next 2 years. But with those statements, with the things that are going on right now, with the adoption that's taking place right now in different types of cryptos, where do you guys see Bitcoin? I mean, let's just take a quick look at Bitcoin. Ray, if you want to start us off, do you trade Bitcoin frequently or not?
So personally, I don't trade Bitcoin too frequently. I was an investor at first, but what I'm starting to realize more about Bitcoin is I feel like it's more of the test of the blockchain and the adoption. So it's kind of like the first one that was ever put out there, right? So it's like everybody's it became a household name now. It doesn't hold as much, I would say, value as other ones. Like, for example, one of my favorites is XRP because of all the utility it has with it. So personally, not a huge fan of Bitcoin, but I am familiar.
Yeah, XRP definitely. I mean, with the lawsuit that looks like they are going to win the lawsuit. We spoke about it actually 2 days ago in one of the other battles, and it looks like we're going to get some pump in XRP. But the question, I think everyone's question is that going to be a sustainable pump, or we're going to start seeing sort of like a pump and dump type thing over a period of, let's say, 3 or 4 months? What is your outlook on that, Austin?
No, I sold XRP at, I think it was like $1.70, and I'm glad that I did. And I'm not buying that again until it breaks $1, till it gets back on Coinbase. This is good, Ray. We could disagree on this one for fun. Everybody's been telling me. My brother knows Ray. My brother's been telling me. My friends that don't even trade, they tell me buy XRP because of the utility. I'm like, for now, when they're being sued by the government and you can't even buy it on Coinbase anymore, I'm not going to buy it. When it comes around and it's out and open to everybody again, then maybe we'll buy it. But
what if it's too late?
It's never too late. It's never too late. Is it too late to buy Amazon? No. Too late to buy Apple? No. If it's that good, bro, it will never be too late. It'll be $5 instead of $1. So what? If it's that good, it'll be 100 eventually. So to me, I don't need to be first. I just need to be right. So I made the right decision to get out when I did. I made some money. And now I'm going to wait until this whole thing blows over, because we have to agree, like, regardless of what you think about its utility, I won't disagree with that, because I think it does have utility way beyond my understanding. I'm just a college dropout. Like, I don't understand blockchain, bro. Like, you know, I'm honest about it. But beyond that, I can react to lawsuit, a bunch of people on the internet telling me why it's going to go up, but it not actually going up. And then I can look at the price and see that it's in a downtrend, and I can say, well, let's just wait for it to turn. And to Gary's point, to tie it together about Bitcoin, if you look at the chart on Bitcoin, just on the daily chart, if you want to throw my chart up really quick. Now, I don't have the statistics to this, but if you were to study and back test just one little thing on Bitcoin, when the 8 and 21 EMA on the daily time frame cross up, if you were to buy it then with a stop loss at a structure point, for example, take it back here in 2021, when the 8 and 21 cross here, you're putting a stop down here at this pin set back here in January 21st, something like that, because that's your structure point. If you were to just measure these rips when it crosses the 8 and 21 EMA up, 80%, 150, I'm sure there's 300% gains in some of these 8 and 21 shifts. So for me, long-term Bitcoin, Gary, I think Bitcoin is going to be the one that competes with the central bank digital currency. Like you said, they're going to come in and they're going to try to remake financial markets. It's inevitable. And when they do that, it's going to be the Fed. Somehow they're all sitting around the table right now trying to figure out, how do we smoothly move people from cash and USD to Fed coin? Because if we don't, we're going to lose them to China and the digital yuan potentially. And business is going to go digital with China. So you're going to have a trifecta of Bitcoin versus the US Fed coin versus the Chinese yuan for digital global reserve supremacy. And I think that that is a very tough battle to see who wins. I don't think there is a winner. I think all three will coexist for a very long period of time. But in that, that's where I start to get into the Bitcoin is digital gold. Bitcoin is going to be here for the long run. And probably, even though right now Bitcoin has the 8 and 21 EMAs crossed down, as soon as they cross back up on the daily, your boy starts getting excited because I can buy it. And I know that when this thing rips, probabilities would say $100,000 Bitcoin is in the cards in my lifetime. I'm going to live, hopefully another 40, 50, 60, 70 years. If I would say within 30, 40 years, if you didn't see Bitcoin at 100,000, something is going on, So I'm very much in the boat that Bitcoin will hold value digitally. Will it be the utilitarian coin of the future? I don't think so. Probably not, because it was the first one. But think about like companies in the tech bubble. Not all of them lasted. Yeah. But like I just said, Amazon is still a good buy 15 years now later. You know what I'm saying? So there's still good coins. And I think that's Bitcoin. Bitcoin is Amazon. It's gold. It's Apple. It's digital value. But right now, 8 and 21 are bears. So I'm shorting it tomorrow if that's the case. You know what I mean? So I sit in both boats, Gary. I sit the long term. Okay. I believe in it, but short term, both ways.
And see, I agree with that. I agree with that as far as like the store value. But I think like as far as utility, like you said, I don't think it's going to be, that crypto that all transactions are based off of, because
definitely not. Too slow.
It's too slow. It costs too much.
Slow. So Yep. I agree with that. But it's got good, like if you would have said to me 5 years ago, 10 years ago, and there were people saying this, buy Bitcoin to hedge inflation. It's like real estate. It's going to go up in time. Now that idea makes sense to me. And I don't think we're late on it to now get in that boat, because now look at all the big money that's coming in. Big banks buying this thing, trying to set up funds and ETFs and things around it. It ain't going anywhere,
Sure.
And we're still early. Wouldn't you agree, Gary? Like at some point, being in markets as long as you've been, I feel like you get so deep into your learning and your research and Twitter and books and YouTube, you could still be early and think in your own mind, I'm late, man. People have been talking about Bitcoin for years. I'm late. It's like, no, you're not. You're just deep in it,
Yeah. But it's like everything, if you think about the .com bubble, when it first started, the people got in real early there. Those are the guys that are sitting today, and they've been made millionaires within a few years. It's never too late to get in on a trend. As long as you get in on the dips of that trend, you can still make money. but it's those guys that got in, that bought Bitcoin at 50 cents and making the money that they're making now on that. So it's really saying, what is your investment appetite? What type of thing are you? Because when you get in when it's very early, it's always risky, high risk, but high returns. Now it's a case of you can still make good money from it, but it's not going to be like, you're not going to be overnight millionaires by buying, a Bitcoin at the rate that it's at right now. So it's all about,
that's a good point.
It's all about risk appetite.
You got to be able to hold through the long time period too. Like think about Amazon again, and the same thing with how Bitcoin goes through 90% drawdowns. You could think it's a great investment, but when your money is invested in it and it's down 80%, are you still going to think that? Most people don't have the balls for that. So that's just the way. That's the cruel beast of the market, right?
Sure, absolutely.
I think that's where the psychology comes in, right? Because it's like, when people are so used to seeing these huge explosions in price and even declines, because you can trade Bitcoin and make money buying and selling it, so people are so used to that volatility. And now that it's kind of, I don't want to say slowing down, tremendously, but it's not that same volatility as we had back in, the bull run around that phase.
Days, 15% days.
Exactly. But people still have this idea in their head, like that's still a normal day, so they throw all, I would say, like rationale out of the window and just try to, balls to the wallet.
Yep. Now we're going to go ahead and show the scoreboard quickly, and then I want to go ahead and ask Ray a question on US dollar CAD. But let's go take a look at the scoreboard. Scoreboard right now, we've got 2 trades in from both challenges, and as we look right now, it's fairly. It looks like it could be. No, it's Austin. Austin is about $10 up, or a little bit more than that. So to Austin, you're leading currently right now, but we got a lot of time left in the next 5 days, so things could change over the next 5 days. But it's early stages. But Austin, you're definitely leading at the moment right now, just above Ray at the moment right now. So we'll see how that plays out. Now, a question for Ray. You trade you mentioned you trade 2 currency pairs: US dollar, Euro, US dollar, and then US dollar CAD, right? Is
correct?
The same? So with the dollar doing what it's doing and had its rallies over the last few weeks, and oil prices where it's at right now, where we're expecting to go, what is your long-term view on US dollar CAD? And I'm putting you out of your comfort zone right now.
Yeah, definitely. He knows that I focus on the lower time frame, so he's trying to get me.
Yes, I am.
But all right, cool. So zooming out to the monthly first, let's do a quick analysis. So we can see an actual pretty nice decline here, taking out some of the lows. And right here is where we see a lot of exhaustion to the top side. So when we drop down to weekly, I have a couple zones marked up here of, like points of interest that I would like to see the market interact with. And personally, I would see, a reaction in this area here would be optimal, and then a sell-off occurring from that point. We have a lot of bullish momentum at the moment, so I'd like to see us clear out these highs here first. But personally, I use something called imbalances as well. And for example, on this candlestick here, we need to see, this area be retested with an actual wick. So yeah, I think short term, a retest into this area, and then long term, a sell-off for sure.
Okay. All right, good. Yeah, because at the moment right now, we're still seeing the dollar pushing, but we are seeing oil also pushing. So there could be a standoff. And the charts that you've shown us, a lot of the charts you've shown us, it really shows range bound with its larger or smaller ranges. It seems like it's range bound, so it's bouncing back and forth between those ranges. So
yeah,
there's a
UCAD
struggle
does that a
between
lot.
the two. Yeah, there's a struggle, but it's good to know. It's good to know where the turning points is, and that's, I think, the essential for all traders, whether you're scalping, short-term trading, or even long-term trading. Turning points or knowing where the market's going to turn is essential, because that helps you be able to set your bias for that particular trade, and then go ahead and focusing on just that one direction, whether it's counter trend line breaks, whether it's using momentum indicators, whatever that is. You need to have the turning point so you can spot where the turning points are going to be, and you can go ahead and set your stop losses and your targets based on those levels as well. So
that's actually like a really important point that you just said, is like that helped my trading so much, is just focusing on the actual ranges and while I'm on the lower time frames, understanding that if I'm not at what I believe is the actual turning point, continue flowing with the market instead of trying to catch the holy grail, transition to, from an uptrend to a downtrend or something like that. Just flow with what the market is telling you.
Yeah, absolutely. Absolutely. Well, guys, that you know what? It's been absolutely awesome. So we're going to go ahead and close off now. Ray, I want to go ahead and give you the opportunity to be able to share with the viewers exactly how they can get in touch with you, how what they can learn from you, and at the same time, go ahead and share a little bit of information about your charity of choice as well.
Awesome. So you can get in touch with me on Instagram at RayvonFX. What you can learn from me, obviously, is how to trade the markets, but with a different lens than you may be used to. So I use order blocks, imbalances, liquidity, and things like that, as well as session time. So I really focus on, previous London session high, London session low, New York high, low, etc., to really get my advantage over the market or edge. I trade mostly New York open. So you'll have a very, very structured way of trading that you don't have to be at the markets all day. You just come for an hour or two and you catch that impulse leg structure and you go on with your day. Besides that, my charity of choice is actually starlight.org. So it's actually a charity for kids in the Cedars-Sinai where they can actually, come in and give these kids, whether it's clothing, whether it's games, video games, VR, things to help them, through the experiences they're having in that moment. So yeah, thank you guys for having me.
Well, that's fantastic. Well, thank you for sharing, Ray. Appreciate that. Austin, if you want to go ahead and share, how can viewers get in touch with you and learn from what you do here, not just here, but of course what you've shown here, but also what you do on your own websites and YouTube channels.
Sure. So again, I appreciate you guys having me back for the second time. It's always good to chat with you guys. I love the discussion and I love going back and forth with Ray and you as well, Gary. So for me, I want to take a second to just plug the charity first. I'm going to be, when I win, sorry, Ray, International Rescue Committee is who we'll be donating the money to, just because of everything going on with the Ukraine right now. I think that that's the best thing that we can do. As far as working with me and getting in touch with me, I have courses, I have seminars that we do every year, multiple seminars throughout the United States, not international yet. But right now, asfx.biz is my website, asfx.biz. But right now, we just actually launched a brand new service called ASFX TV, which is where you can watch funded traders and other profitable traders trade live. Because courses, I think, are great. I sell my courses and everything. I think it's a great way to learn. But the best way to learn after that or with that is actually seeing someone follow their winning process every day, kind of looking over their shoulder. So we decided to put together a exclusive kind of premium streaming service, almost like Netflix for traders, where people can learn from me, but also other traders that we bring onto the platform. We're going to soon have a mobile app, soon have a smart TV app. There's a lot of fun stuff coming with ASFX TV, and you guys can check that out at www.asfx.tv. So we've got asfx.biz as my main website and asfx.tv for the new service, which is pretty cool. You should check it out, Gary. I think you'd like it.
Yeah, I actually have, and it is pretty cool. So you got a great website there, a great thing going there. Well, I appreciate you sharing there as well, Austin. Well, traders, you heard from the best right here, and you've heard what they've got and where you can get hold of them. Make sure you go ahead and do so. Reach out to them, take a look and see what they're doing. They absolutely are the best traders that we have here at the Trading Battle. So make sure that you go check them out. If you want to get hold of me, of course, go to tradersnetworkclub.com or go to my YouTube channel, FX Big Dog. Yep, the only FX Big Dog there is, and that is me. So check me out. All right, traders. Well, Ray and Austin, it's been an absolute awesome time. Thank you very much. I appreciate it. It's been fun hosting the session. And I know that the viewers have learned something new, and that is great. It's always awesome when the viewers can get something new from each trading battle. Now, knowledge is power, and I think they got exactly that, a whole bunch of knowledge. So that is fantastic. Before we say goodbye, I want to go ahead and say thank you to our sponsors, ACAP. And as a show of appreciation, I want to go ahead and make sure that you guys are subscribing to this channel, sharing the video, and smashing that like button, like I always like to say, like there's no tomorrow. So smash the like button like there's no tomorrow. Challengers, once again, thank you very much. My name is Gary Fichardt, wishing you joy, success, and lots of profits. Until next time, happy trading, my friends.
Thanks once again. See you next time.